All right, after today, well, actually after yesterday, I think we have a little bit more clarity of where we're probably going in the stock market. Um, I think we were starting an intermediate decline here, and in that scenario, the pattern would have looked something like this. We would have continued down a little bit deeper, pushed the McClellan oscillator into a deeply oversold condition, bounced, then had another leg down. But I think the Fed rescued the market yesterday and probably turned this instead of a left translated daily cycle that was going to follow this pattern. I think they aborted that and have turned this into a half cycle low. All right, so now I think more likely what we're going to have at this point is that this second daily cycle, this was the last daily cycle low, this turns into a half cycle low instead of a left translated cycle. We get a rally. I'm going to guess that we're going to make another higher high. Maybe we come up enough to fill this gap here. And then we get our move down into our daily cycle low. And then we're going to need another complete daily cycle before this larger intermediate cycle can move down into its intermediate cycle low, its larger degree cycle low. So in that scenario, I suspect this move into the daily cycle low will be um, rather severe, pretty scary, and then the rebound out of that won't be um, powerful enough to make a higher high. So this may turn out to be the left shoulder of a head and shoulders topping pattern. Um, maybe this declines a little deeper, possibly comes back down to test this neckline area right in here, get a bounce, and then a much deeper correction that would bottom. At that point, the cycle low timing band would be probably sometime in September, late October, or I'm sorry, late August, or sometime in mid-September would be our timing band for the next intermediate cycle low, something of the same degree as this thing here, although I really don't think we're going to break below these lows, but I do think we're going to at least come back down and probably go, at least back to 2600 or lower during this next intermediate cycle low. So right now, this seems like a more likely pattern to me. I think the Fed managed to abort this, what was probably trying to unfold as a left translated cycle. I think they managed to abort that yesterday, and we're getting some follow through today. So now I think the more likely pattern is probably a higher high, and then a very deep and very scary daily cycle low here sometime in early to mid-July, followed by a bounce that's not able to um, move above this high wherever it comes, and then a much deeper and much scarier correction here in September.